Good evening. I'm bringing you important updates about the American dollar's dramatic journey and what it means for your wallet. In the past few months, we've witnessed a remarkable shift in the dollar's performance that's raising eyebrows across financial markets. Let me paint you a clear picture of what's happening. Initially, the markets were riding high on optimism about the U.S. economy. There was a widespread belief that President Trump's tariff policies would hurt other countries more than America. That story has taken quite a turn. What we're seeing now is a significant sell-off of the dollar, which has snowballed into what experts are calling a full-blown crash. This isn't just a minor market correction. We're talking about movement that could affect everything from grocery bills to retirement savings. When Trump's election victory started looking likely around September last year, the dollar surged against other currencies. The dollar index, which measures how strong our dollar is compared to other major currencies, showed steady gains from late September, reflecting confidence in Trump's economic promises. But here's where things get interesting. Recent anxiety about Trump's unpredictable trade policies has caused many investors to reconsider their positions. Think of it like this. Imagine you're playing poker, and suddenly the rules keep changing mid-game. That's what's happening with our trade policies, and big investors don't like uncertainty. They're now pulling back, causing this dramatic decline in the dollar's value. This situation is setting up what could be a fascinating showdown between President Trump and the Federal Reserve. It's like watching two heavyweight boxers circling each other in the ring, each with their own strategy for managing the economy. Before we dive deeper into what this means for your pocketbook and the broader economy, subscribe to our channel and ring that bell to stay informed about these crucial economic developments. Your financial future could depend on understanding these market moves. Good evening, viewers. Tonight we're analyzing a fascinating economic trend that's reshaping America's financial landscape. The US dollar hit a remarkable 3-year peak in early January, and there's an intriguing connection to former President Trump's re-election that deserves our attention. Let me break down the 3 key factors that drove this surge in the dollar's value. First, investors were betting big on Trump's economic playbook. They anticipated his combination of tax cuts and tariffs would spark inflation, pushing the Federal Reserve to raise interest rates. This made the dollar an attractive safe haven for savings. Second, and this is particularly interesting for our long-term viewers who follow international markets, Trump's aggressive trade stance was viewed as more damaging to foreign economies than to the U.S. This perception weakened other currencies, effectively boosting the dollar's relative strength in global markets. Third, the American business community showed tremendous confidence in Trump's promised agenda. His commitment to tax cuts and cutting red tape created a wave of optimism about potential growth prospects. But here's where it gets complicated, folks. This dollar strength actually ran counter to the Trump administration's stated goals. Both Trump and his economic team had repeatedly expressed their preference for a weaker dollar, arguing it would help American manufacturers compete globally and support their vision of reindustrialized America. Despite these contradictions, the market's response demonstrated genuine confidence in Trump's economic policies. However, this bullish trend didn't last indefinitely. About 2 months ago, we began seeing significant shifts in the dollar's trajectory, with notable declines emerging in the currency markets. This trend reversal raises important questions about the long-term sustainability of certain economic policies and their impact on our national currency. Stay tuned as we continue to monitor these developments and their implications for your financial decisions. Good morning, listeners. Breaking economic news today as we witness a dramatic shift in the global financial landscape. The U.S. dollar is experiencing what analysts call a full-blown crash, with the dollar index plummeting nearly 10% from its January peak. The euro has surged to 1.14, reaching its highest level since 2022. A reversal from predictions that suggested dollar-euro parity. This shift reflects growing concerns about American economic policies. Market experts point to several factors driving this decline. While there's optimism about conditions in Europe, China, and Japan strengthening their currencies, the primary catalyst appears to be the unpredictability of U.S. trade policies. Of particular concern is the massive 145% tariff on Chinese goods, which economists warn could effectively end direct trade between the world's 2 largest economies. This move has sent shockwaves through global markets and raised questions about future economic stability. The impact is visible in consumer confidence and business investment metrics. Companies are hesitant to make long-term commitments, while consumers show reduced spending confidence. This currency situation represents more than just numbers. It's a market verdict on recent economic policies. The dollar's decline could lead to higher import costs and increased inflation pressures. For perspective, just months ago, analysts were predicting dollar strength. Now, we're seeing what some describe as the most dramatic dollar decline in recent memory. Market watchers are closely monitoring how these currency fluctuations might impact international trade relations and domestic policies. The question remains, will this currency crisis prompt a reconsideration of current trade strategies? Or are we seeing the beginning of a more prolonged period of economic uncertainty? Business leaders across America are trying to plan their futures while playing what amounts to economic roulette. The recent rollout of tariffs, revealed on what some call Trump's chart of doom, followed by unexpected rollbacks, has left consumers and businesses in perpetual uncertainty. Financial analysts are raising red flags, with many predicting a recession. The key issue isn't just the tariffs themselves, it's their unpredictable implementation. How can any business make long-term investments when the rules keep changing? Let's talk about Trump's vision of reindustrializing America. It's like building a house on quicksand. Major industrial projects require massive upfront investments and years of planning. But who's going to commit billions when tomorrow's trade policy is uncertain? The smartphone situation illustrates this problem. While consumers might celebrate exemptions for Chinese-made phones, American manufacturers face an impossible position. Imagine trying to start a U.S. smartphone factory today. You'd face competition from exempted Chinese imports, while paying a 145% tariff on essential components like batteries and screens. This creates a scenario where policies meant to protect American industry might actually be suffocating it. The fragmented approach to tariffs isn't just affecting current operations, it's potentially derailing future industrial development. As we monitor these developments, one thing is clear. Economic certainty isn't just about numbers. It's about creating an environment where American businesses can confidently plan for the future. Without that foundation, the dream of a reindustrialized America might remain just that, a dream. In today's breaking economic news, we're seeing a significant market reaction to recent trade policies affecting the financial sector. Presidential tariffs have created uncertainty and triggered a dollar sell-off. Treasury markets are experiencing unprecedented volatility, with the 10-year Treasury yield rising from 4% to 4.5% in just 1 week, a move raising concerns among financial experts. This represents a major shift in government borrowing costs. Congress has approved a budget blueprint that could add $5.8 trillion in new borrowing over the next decade. The Nonpartisan Committee for Responsible Federal Budget verified these numbers, drawing parallels to recent British political events. Analysts are comparing this to the Liz Truss situation in the UK, where aggressive borrowing led to a currency crisis requiring Bank of England intervention. Many wonder if the US could face similar challenges. The dollar's decline offers some benefits, particularly for American manufacturers and exporters who may become more competitive globally. However, this advantage comes with broader economic implications. The rapid shift in Treasury yields presents real challenges for government financing and could affect mortgage rates and retirement savings. These market movements are interconnected, with tariff policies creating a domino effect on currency values and debt markets. Experts are monitoring these developments closely, suggesting we might be approaching a critical economic juncture. The combination of increased borrowing costs and planned deficit spending poses challenges requiring careful management by fiscal and monetary authorities. Financial experts are warning about potential inflation risks stemming from the recent decline in the US dollar. This situation, complicated by trade tensions and tariff policies, could significantly impact American households. Market analysts point to a perfect storm of economic factors that could trigger price increases. What we're seeing is a compound effect, explains Dr. Marcus Henderson, chief economist at Capital Market Solutions. The weakening dollar makes imports more expensive for American consumers, and when combined with tariff impacts, you're looking at a serious inflationary pressure cooker. The initial expectation was that a stronger dollar would help cushion the inflationary impact of trade tariffs. However, with the dollar's downturn, that protective buffer has evaporated, creating a double whammy effect on consumer prices. Concerning is the potential for political interference with the Federal Reserve's independence. Sources suggest growing tension between the administration and the Fed over handling these inflationary pressures. If there's political pressure to keep interest rates artificially low despite rising inflation, we could see serious economic consequences, warns Sarah Peterson, former Fed advisor. The Fed's independence exists to make decisions based on economic data rather than political expediency. Looking ahead to 2025, these economic and political dynamics are expected to remain prominent. The interaction between monetary policy and market reactions will continue to shape the economic landscape. As inflation concerns mount, Americans should prepare for potential price increases. Financial advisors recommend reviewing investment portfolios and considering inflation hedging strategies. Our latest magazine edition explores these dynamics, examining the key players who will shape economic policy in the coming years. Stay tuned for our continuing coverage of this developing economic situation. Good evening. I'm bringing you today's most significant developments in global influence and power dynamics. Our analysis, based on votes from over 15,000 participants, reveals fascinating shifts in the world's power structure. Leading our coverage is Donald Trump's comeback story, which has captured international attention. The former president's influence continues to reshape American politics, showing resilience amid legal challenges. In European news, Giorgia Meloni's confrontation with Italy's judiciary system highlights tension between populist leadership and traditional institutions. This struggle exemplifies the challenges facing Europe's new right-wing movement. Elon Musk's expanding influence deserves attention. His recent moves in social media and artificial intelligence impact global markets and public discourse. His decisions are reshaping multiple industries simultaneously. In South Asia, we're tracking Modi's political maneuvering in South India, where regional dynamics create new challenges for his administration. Our report examines the United Kingdom's current position globally, analyzing its post-Brexit trajectory and international relationships, revealing trends in British influence and economic resilience. In the Middle East, we're monitoring the peace situation in Gaza, with our experts analyzing sustainability prospects for current diplomatic arrangements. For premium subscribers, we offer exclusive access to behind-the-scenes content, including debates among our analytical team regarding these rankings, revealing disagreements about leaders' relative influence. This coverage reflects the interplay of global power dynamics, economic influence, and political leadership defining our current era. These insights help understand not just who holds power, but how that power shapes our world's future. Stay tuned for our analysis of each top 25 influential figure as we continue tracking these stories. Good evening, viewers. Tonight, we're discussing something crucial to maintaining independent journalism in these challenging times. Quality reporting requires substantial resources and dedicated professionals working around the clock to bring you accurate, timely information. We've been overwhelmed by the positive feedback from our audience regarding our recent coverage through our Too Long platform. Subscribers tell us that each issue surpasses their expectations, delivering in-depth analysis of critical events shaping our world today. Our team of experienced journalists works tirelessly to provide comprehensive coverage you can trust. For those who appreciate our commitment to thorough reporting and wish to support independent journalism, we've made it easier to access our premium content. By visiting tulung.news, you can secure your copy of our latest investigations and analyses. We're proud to offer our subscribers a 20% discount on every issue through our subscription service. This week only, we're offering an additional $3 discount on any subscription when you use the code INFLUENCE at checkout. This special promotion reflects our appreciation for viewers who understand the value of well-researched, unbiased reporting. Your subscription does more than provide premium content. It helps fund our journalism efforts and enables us to maintain our commitment to keeping our YouTube content free and accessible to all. In today's media landscape, where quick headlines often overshadow substantial reporting, your support helps us maintain our high standards of journalistic integrity. Remember, quality journalism isn't free to produce, but with your support, we can continue delivering the in-depth coverage you expect from us. Whether you're interested in global affairs, economic analysis, or political developments, your subscription helps ensure we can keep bringing you the stories that matter. Visit tulung.news today to subscribe and join our community of informed viewers who value comprehensive, reliable reporting. Together we can ensure that independent journalism continues to thrive. Thank you for your continued support and trust in our